Good evening. Ira Epstein, and here we are with your Sunday evening Spider ETF stock market wrap-up. And this will be your weekly edition for this Sunday, the 19th of May, 2025. So the big event of the weekend was on Friday. Moody's cut the U.S. credit rating from AA1 to AAA. Now, they're the last one to do it, but their reasons make all the sense. We are not seeing that Congress wants to bite the bullet and cut spending. What we're seeing is they want to actually add to the debt by cutting taxes, adding to the SALT in other areas, Social Security under certain things, meeting all of Trump's promises. On the other hand, where's the spending cuts? And the idea from the Trump administration is they will make this all disappear via increased business in the United States, which will bring in more taxes, take care of it. I've got my doubts. The Conference Board's going to release their U.S. April leading, coincident, and lagging economic indicators at 9. Remember, the month before, they declined 0.7 from the prior month. President Trump and Putin are scheduled to have a phone call tomorrow. In front of that, Russia today launched 273 drones into Ukraine, hurting a lot of them, killing a lot of people. And obviously, that's the biggest amount ever that they've done. So at what point, you have to ask yourself, does Trump have enough of it and end this marriage he has with Putin? In other words, when does he get as rough on him as he's been on others? Probably not going to happen that way. Awful lot of missiles, nuclear weapons, and a man that is as rough as Trump. And that's the dilemma that is being faced right there. So we'll see what happens here. The EU and the UK want him to get rough. So we'll see where that carries it. As for the market itself, a mixed day, but we've started the futures markets on the soft tone. I saw the Dow was down over 300 points early on. S&P's getting hit in the other markets from there. But for the overall day, the question, of course, is going to be, what happens with this Moody downgrade? Are we going to see the 30-year bonds go over 5%, and will that spook the market? That's what I think you have to turn your eye to. Everything else, well, let's take a look at charts, and we can go through that during the week. I'm going back to Tesla, and you might say, why? Because this pattern is important. This market fell to an old low pattern right in through here and held. And suddenly you're coming back as Musk has walked away from Dodge. In other words, he's devoting time to his companies again. That's what you want to see. I heard that the Boring Company just got a huge contract. That's going to be very interesting. Now the question is, what can he do about the car? And remember, the car is not a high profit margin. What's profit margin are the batteries, all his other parts. But he needs to prove it's still there. And because of what he did in America and the cutting and so on, well, people just don't want his car right now. He did his own worst damage to himself. Yet, when I look at this and we're looking at weekly charts, higher lows, higher highs, that's bullish. The market, for the first time, was able to close over the 18-week average all the way since back at the beginning of the year. So you're now 5 months almost, and finally you're back over it. That's why I wanted to start covering it again. What else? Well, you're nowhere near a Bollinger Band, but do you disagree that the combination of, in green, the 100-week average, in gray, the 200-week average, and all this, that's pretty darn important one way or the other. By the way, if you become a subscriber of mine, I have a video that explains all my lines and what they mean, not how to use them. That goes into the subscriber video, and that's where I talk it. All right? The best way to learn what this is, my courses on full charting, which shows you a lot of all this. But then you get into the nitty-gritty of Bollinger Bands and what outside days are. I think that is what's so important. Suffice to say right now, you have a market that's back in a bull mode, pullbacks to 309.13. From here is about $40 lower. That's where I'm looking for the support in the market. And that number, I don't think it's going to go up too much early in the week. Momentum pointing higher. Trend up, bias up. When we come to the CME group, well, they tried a pretty big break this week. If you take a look, they got as low as 265.72, and then the market came back off that low. Is this market peaking out? My work says no. You still have an embedded reading. When the red line closes under 79, that's when I think the momentum comes out of the market. Netflix, a new high, an outside week up. It's overbought as can be. It's a new high. It certainly is trending to the upside. The swing line is higher. You have an outside week up. What you don't want to see is this week's lows taken out this week or next week, the way that I teach my outside day course. But I'll go into that in the course, not here. Suffice to say, you're at a resistance point, the upper Bollinger Band. We then look at Lilly. I'm starting to watch it again because I think the market's trying to carve out right here a base. I didn't say it's done it. I think it's trying to carve one out. It keeps holding the 100-week average in the Bollinger Band. If it can start getting back over the 18-day average on a weekly basis, I'd get an all go. Until that comes, it's fun watching, but I don't think you pull the trigger. This move back up in Home Depot, it's got to prove it can hold the 18-week average. This is the bear market rally that's consummated by getting there. Now it's got to prove itself one way or the other. If interest rates keep climbing, that probably hurts this to a degree. In Uber, new all-time high. What more can you say? The market is overbought. It's over the Bollinger Band. I teach never. Can I make that word clear enough? Never to initiate new long positions over the band or new shorts under the band. And I won't change that. Dutch Brothers, going back to it, I just like what I'm seeing. This market's had the correction that I had been looking for. Now I can see where support should come in around the 6,500 level. $65 level, excuse me. I'm so used to these other high price ones. You're at 73.72, so I'll be watching this market very carefully this week with you. In XLI, the industrial companies, up and away, these big boy companies, but look for problems in the 145.66 level, the upper Bollinger Band, on the energy sector. So now the president is talking Iran and Russia. This could be a very interesting week in both of them. What does it do in the energy part? That's going to be one of the things. Because this XLE is made up of a lot of the big companies. Where are we? Are we going to hold up here? Are we going to see that the sanctions go on Russia and Iran? I don't know. I want to see what it does and what that's going to do for all that. As for the dollar, we had a bounce back finally to the 200-week average, and you lost the bearish embedded reading. As far as I'm concerned, I had done a report, if you remember, on the dollar 3 weeks ago, and I thought that the 9,800 level on the futures index was the fourth price count, the one that matters a real lot now. You rarely get to a fourth count. If you start making new lows under those levels, I hate to say it, there could be another 8 percentage points to the downside. Yeah, it's real scary. So seeing the bounce is nice, but it makes sense off of what the futures are doing. It's certainly not a buy signal. Gold, on the weekly chart, you've turned the market down. You lost the bullish embedded reading, you're coming down. So you either go back up over the new high that you made, or prices will likely try to hang in as price and the 18-week average come together. In the copper market, the futures act bad and COPX looks good. You heard me good. Until this market gets back under now 37.05, I expect to see support between 3,900 and let's say the 38.40 level, which is the 200-week average of lows, and that's it. So you put this all together, you come up with what you want to do. And I want to remind you that I've got a special report out on natural gas. And that natural gas is UNG and KOLD. So you want to look at that if you're a SPDR ETF trader. And if you're in futures, you want to look there. I cover a lot of detail in this report. Please go take a look at it. I've got the seasonals, the price counts. I look at everything on daily and weekly charts, and I think you might find it interesting. Just go to IraEpstein.com. It's on the top left in bright green. You can't miss it. And I'm Ira. It goes off our website tomorrow. You take care.